Imagine staring at a crumpled fender on the side of a super busy highway. It's pouring rain, you're totally stressed out, and before you even manage to lower your smartphone camera, your phone buzzes.
Right, exactly. The worst feeling in the world, usually.
Yeah. But you look down, and your insurance payout has already hit your bank account. Like literally right then. Welcome to the deep dive. And right off the bat, I want to say today's deep dive is brought to you by AI Opportune.
Which is incredibly fitting for what we're talking about.
Oh, absolutely. If you want to actually understand the rapidly shifting landscape that makes this kind of, well, autonomous magic possible, AI Opportune is the premier hub and newsletter for AI insights and cutting-edge tools.
Yeah, it's a great resource.
Totally. I highly encourage you, if you're listening, to subscribe to AI Opportune to stay ahead in the AI revolution. It's basically the ultimate resource for navigating exactly the kind of massive technological tectonic shift we are unpacking today.
Yeah, I mean, it really separates the signal from the noise, especially when you're looking at industries that are being fundamentally rewired overnight, not just incrementally updated.
That is the perfect way to phrase it, actually, because today we're looking at an industry that, for most of us, is completely synonymous with agonizingly slow bureaucracy.
Oh, definitely.
We are talking about insurance. So the source material on the table today is this really fascinating document circulating right now in 2026. It's called the STP Pivot Semifinal.
Catchy title, right.
Right, yeah. But our mission here is to trace how the insurance sector transformed from what was basically a sluggish digital filing cabinet into a fully autonomous instant payout machine, and what that lack of friction means for your wallet.
Yeah, and to really appreciate the sheer scale of what's happening right now in 2026, we have to look at the baseline first.
Okay, take us back.
So for decades, the insurance industry operated on this speed-focused mindset. Innovation just meant making the manual processes faster.
Like getting a faster scanner or something.
Exactly. They took a paper form, turned it into a PDF, and then just tried to get a human data entry clerk to type the numbers into a database a few seconds quicker.
Right.
But the new reality outlined in this document is entirely different. We've shifted to an autonomy-focused mindset. It's really a ground-up restructuring of how we handle risk and restitution.
And the engine powering that restructuring has a very clinical-sounding name. Through processing, or STP.
Right.
But the reality of what STP does is wild. In this context, it means an end-to-end automated workflow where a claim goes from the exact moment you hit submit on your phone all the way to the final financial payout into your checking account, driven entirely by artificial intelligence.
Yeah, zero human touch points.
Literally zero. Nobody is reviewing your file. Nobody is rubber stamping an approval. The AI handles the verification, the policy checks, the fraud detection, and wires the money. It's like going from a slow manual factory assembly line to just a vending machine.
That's a really good analogy. And the adoption metrics in the document tell the real story here. Back in 2023, the industry was basically just dipping its toes in the water. I think only about 14% of insurers were utilizing high-level STP workflows.
Just 14%. Okay.
Yeah, but today, early 2026, a staggering 38% of Tier 1 carriers have integrated these autonomous systems.
Wow.
And the projections show that scaling toward 50% by next year, 2027.
Wait, hold on. You're telling me an algorithm is making a final financial call on a massive scale?
Yeah.
We've all seen AI hallucinate or, misread basic information.
Sure.
Are these massive financial institutions really just leaving the cash register completely unattended?
Well, see, that anxiety is exactly what regulators flagged on day one. But the crucial caveat here is that this 38% adoption isn't applying to a multi-million-dollar corporate liability lawsuit or a super complex medical malpractice claim.
Okay, so they're not letting it handle the really messy stuff.
Right. The industry is aiming STP squarely at high-volume, low-complexity claims. The document actually calls this the birth of instant trust decision-making.
Instant trust. I like that.
Yeah, the system doesn't need a human to double-check the math because the parameters for these specific high-velocity claims are locked in, and they're instantly verifiable through outside data.
But still, if the tech is so bulletproof that it's handling real money without humans, something massive must have changed under the hood recently to make that possible. Just a few years ago, if you uploaded a slightly blurry photo of a doctor's note, the portal would just crash or reject it completely.
Right, yeah. Please upload a clearer image. We've all been there.
Exactly.
Well, according to the source, three massive technological convergences hit maturity basically simultaneously.
Okay.
The first major hurdle they cleared is something called multimodal document intelligence. So previous generations of software were incredibly fragile.
Like they needed perfectly structured text boxes, right?
Exactly. Everything had to be perfectly aligned. But the 2026 AI models handle unstructured, chaotic data with 99.2% accuracy.
Meaning, it can read my doctor's completely messy cursive handwriting, even if I, like, spilled coffee on the paper before he took the picture.
Not only does it read the messy handwriting, but it simultaneously analyzes a poorly lit, super grainy photo of your car accident taken at night while parsing through, 30 pages of dense, archaic policy legalese.
Wow.
It synthesizes all those different modes of text, image, legal parameters instantly.
Okay, so that completely eliminates the bottleneck of a human having to manually type your chaotic reality into a neat little spreadsheet.
Exactly.
But just because the AI can read my messy note doesn't mean I'm telling the truth, right? I could just forge the note.
And that brings us to the second convergence, real-time data orchestration. The AI isn't operating in a vacuum. It's not just taking your word for it.
So what is it doing?
Through APIs, which are essentially, invisible digital bridges connecting different software platforms, the system pulls in external risk signals in milliseconds. It literally cross-references your claim against reality.
Okay, give me an example of what that looks like in practice.
Yeah.
Because that sounds very sci-fi.
Sure. Let's say you submit a claim stating your roof was destroyed by hail at exactly 4:15 p.m. on a Tuesday. The moment you hit submit, the AI's API bridges reach out to local meteorological databases.
Okay, check the weather.
Yeah, to verify if hail actually fell at your specific GPS coordinates at that exact minute. And simultaneously, it might pull telematics, that's the actual sensor data broadcasting from your car's internal computer.
Like checking your speed at the moment of a crash.
Exactly. And while it's doing all that, it's querying global databases for your historical fraud patterns.
So the AI is basically playing like a real-time detective. It's reading my messy handwriting, checking the local weather at the exact minute I said I slipped, checking my car's computer and wiring me money.
Yes. And it does all of this fast enough to hit the third convergence, the document outlines, which is zero latency payouts.
Right. Getting the money instantly.
The claim-to-cash cycle has plummeted from an average of 5 business days down to just 50 seconds.
50 seconds? That's insane.
Yeah, it's triangulating the truth. It weighs your submitted evidence against the external sensor data, the weather reports, and the strict limits of your policy.
But wait, what if my photo says one thing, but the weather API says another? Does the weather API outrank my photo?
Usually, yes. Objective sensor data carries much higher weight. But if that triangulation aligns perfectly, without any contradiction, it authorizes the payout in under a minute.
Okay, so it's not a detective hunting for a reason to deny you. It's more like an algorithmic referee blowing the whistle the second the play is confirmed.
That's a perfect way to put it.
But let's get into the specifics of where this referee is actually making the calls, because the source outlines this really cool hierarchy of STP suitability, basically ranking where this tech is working best right now.
Yeah, the breakdown is fascinating because it clearly shows where the trust is highest. So at the absolute top, we have parametric life and weather insurance sitting at a 100% STP suitability rate.
Wait, literally 100%, meaning humans have been entirely eradicated from that specific workflow.
Completely. Because parametric insurance is triggered exclusively by IoT, the Internet of Things.
Meaning physical sensors.
Yes, sensors connected to the internet. For example, if a farmer has a crop insurance policy against drought, there are moisture sensors buried in the actual soil.
Okay.
The policy stipulates that if moisture drops below a specific threshold for, say, 10 consecutive days, a payout is owed. On day 10, the sensor flags the database, the parameter is met, and the money just moves. There's no subjective damage for a human to even assess.
Wow. Okay, that makes total sense. It's completely binary. And right below that, the document lists travel and delay insurance at 95% STP suitability, which, again, highly objective. The airline's flight database says you were delayed 3 hours, the parameter is met, the AI sends the meal voucher funds to your digital wallet before you even get to the customer service desk to complain.
Exactly. We only start to see a bit more nuance when we step down to simple health claims, which the document places at 85% suitability.
See, I would think health claims would be an absolute nightmare of subjectivity.
They are, which is why it's not 100%. But for simple claims, the AI relies on matching ICD-11 codes.
The barcodes.
Yeah, it's the universal standardized barcode system for human ailments and medical procedures used globally. If your doctor submits a specific kind for, let's say, a routine blood test, and the AI instantly verifies your policy covers that exact barcode, it just pushes the payment through.
Okay, I follow the logic there. It's just basically checking boxes. But here's where I'm genuinely skeptical. The document lists minor auto claims like fender benders at 70% STP suitability.
Right?
It says it's relying on computer vision to assess the damage from the photos I upload from the side of the highway. But if I take a picture of my bumper, what if the algorithm mistakes a weird shadow from an oak tree for a massive crack?
Yeah, shadows, reflections.
Right. What if a reflection makes a completely totaled bumper look perfectly fine? Does it just shortchange me my repair money in 50 seconds and irreversibly close the case?
Okay, so that fear of algorithmic denial is actually the single biggest consumer friction point. The industry knew they couldn't deploy this if the AI was just arrogantly making bad calls on shadows.
Yeah, there'd be riots.
Right. So they engineered a mechanism called edge case orchestration. The system is actually programmed with a mathematical sense of doubt.
Wait, the AI calculates its own uncertainty.
Exactly. The STP workflow operates on strict confidence thresholds. Let's say the threshold for an auto payout is set at 92%. The AI analyzes your bumper photo, cross-references it with millions of other accident photos, and determines the repair cost.
Okay.
But if that tree shadow you mentioned introduces ambiguity, the AI's internal confidence score might drop to, say, 89%.
And because 89 is below 92, the 50-second timer just stops.
Right. The automated payout is immediately halted, but it doesn't reject your claim.
Oh, it doesn't?
No, instead, the edge case orchestration seamlessly hands the digital file over to a human adjuster. And the AI actually attaches its notes. It essentially says, hey, I'm confident about the make and model, but I need human eyes on this specific dark area near the headlight.
Wow.
So that 30% of auto claims that don't go straight through, they're protected by this safety net. It ensures a human makes the final call whenever the math gets fuzzy.
So it actually knows what it doesn't know. That drastically changes how I view this tech. It's not just a blind guess. But let's zoom out and look at the broader economic ripple effects here. Because if 70 to 95% of these claims are now clearing in under a minute, the cost structure of the entire insurance industry just got flipped upside down.
Oh, completely. The document refers to the new consumer baseline as the Amazon expectation.
Oh, I know that feeling.
Right. We expect instantaneous gratification when we order groceries or, stream a movie. And that expectation has fully infected financial restitution now.
Interesting.
Yeah, a 2026 survey in the text reveals that 72% of policyholders would actively switch their insurance providers solely to gain instant settlement capabilities.
72%.
Yeah. Under 2 minutes is the new gold standard.
I mean, it makes sense. If you make me wait 5 days for a paper check to clear so I can fix my car, I am taking my premiums to the competitor who pays me before the tow truck even arrives.
And the thing is, the insurers can actually afford to do that because the unit economics have just collapsed in the best way possible.
What do you mean?
The cost per claim has plummeted by an average of 65 to 80%. The target marginal cost to process a standard travel delay claim is now literally $0.00.
Zero.
Once the AI infrastructure is built, running that 50-second calculation costs fractions of a cent.
Okay, but let's talk about my wallet as a consumer. If it costs the company literally $0 to process my travel claim, do my monthly premiums actually drop? Or are these massive legacy insurance carriers just pocketing that 80% savings to, buy their executives another yacht?
Well, this is where market dynamics basically force their hand. The document highlights a brutal divergence between legacy firms and what they call AI-native carriers.
AI-native, so startups.
Right. Startups built from the ground up on this tech. If a traditional company tries to hoard that 80% savings and keep their premiums high, an AI-native startup will instantly undercut them. Because the startup knows 72% of consumers are eager to switch. Yeah, the AI-native firms are playing a volume game. They're using their near-zero processing costs to offer aggressively lower premiums, capture massive market share, and essentially force the old guard to either match those prices or just go bankrupt.
It's a brutal race to the bottom for operational costs, but an incredible race to the top for the consumer experience.
Exactly.
But what about the human cost in all this? If the marginal cost of processing is practically zero, and algorithms are doing all the heavy lifting, are all of the human claims adjusters just out on the street?
Well, the data actually shows a massive reallocation, not an elimination. The document calls it strategic human allocation.
Okay, what does that mean in plain English?
It means you don't need a trained, empathetic professional to verify a 3-hour flight delay.
Right.
So those human adjusters are shifted to high-complexity, high-empathy scenarios.
Like, say, a multi-car pileup with disputed liability or a catastrophic house fire.
Precisely. When someone loses their home, they absolutely do not want an algorithm pinging their phone in 50 seconds. They are in shock. They need an empathetic human being who can help them navigate the emotional and financial devastation.
That makes a lot of sense. So STP handles the robotic tasks so humans can do the things that actually require humanity.
Exactly.
So the carriers are fighting this existential war for market share. But the source material points out an entirely different group of people getting very rich off this transition.
Oh, yeah, the builders.
Right. It outlines a $25 billion secondary market created by this automation tipping point.
Think about it this way. The carriers are entirely focused on acquiring policyholders and paying out claims, but maintaining a 50-second autonomous reality is incredibly dangerous if the underlying tech isn't completely airtight.
Sure, yeah.
And that opens a $25 billion opportunity for the insurtech founders who actually build the infrastructure.
You know, it makes me think of, it's like building a digital immune system. The insurance carriers are the body, just trying to function and survive in this new, fast-paced environment. But these tech founders are building the white blood cells, the specialized tools that attack the viruses and keep the body from destroying itself.
That is a phenomenal way to look at it, because the biggest virus threatening a 50-second payout system is automated fraud.
Oh, absolutely.
The first major area founders are targeting is fraud detection layers, because if an AI pays out instantly, bad actors will just use AI to exploit it instantly.
Right. If I can use a generative AI tool to create a photorealistic deepfake of a smashed windshield, I could theoretically defraud an automated system 1,000 times a day before anyone noticed.
Which is exactly why the insurtech immune system relies on real-time identity verification and synthetic media detection. We have algorithmic referees constantly scanning the submitted photos at the pixel level, looking for the digital fingerprints of AI generation.
Wow, so it's AI fighting AI in real time.
Yes, just to protect the carrier's capital.
Huh.
And the second major area these builders are targeting is something the document calls compliance as code.
Compliance as code. Okay.
This is the ultimate invisible safety net. In 2026, regulations around algorithmic bias and financial fairness are shifting almost weekly, it seems.
Right. The laws are constantly trying to catch up to the tech.
Exactly. And you can't have humans manually updating the AI's massive rulebook every time a new law passes. It's too slow. Compliance as code means the software automatically ingests new regulations and instantly restricts or opens up the STP workflows to ensure the carrier never violates the law.
So the system actually regulates itself in real time. That's incredible. It's exactly like the California gold rush. The insurance carriers are panning for the gold, but these insurtech founders are the ones making billions selling the pickaxes and shovels, right? The fraud layers and compliance codes.
Completely agree. The overarching mandate for these tech builders is summarized perfectly in the text. They say, remove the process to perfect the outcome.
Remove the process to perfect the outcome.
Wow.
And that outcome is basically frictionless restitution.
Exactly.
Well, to pull all these threads together, if you're listening to this,
Yeah.
we've watched the insurance industry pivot from a grueling, speed-focused bureaucracy into an autonomy-focused powerhouse.
Yeah, it's a completely different world.
It really is. By layering multimodal document intelligence, real-time data orchestration, and zero-latency banking, the machine can now triangulate the truth of your claim in 50 seconds.
Oh.
So the next time you are sitting at an airport gate, glaring at a delayed departure screen, or surveying a minor scratch on your bumper, remember that the entire life cycle of your claim, the verification, the fraud check, the final payout, it might be entirely resolved by an algorithm before you even put your phone back in your pocket.
It fundamentally changes our relationship with the concept of risk.
Totally.
And it leaves us with an incredible implication, especially when you consider that 100% straight-through processing rate for parametric claims we talked about earlier.
Oh, right, the IoT sensors in the farms.
Yeah. If we have internet-connected sensors and APIs that can instantly detect a loss and automatically trigger a financial payout, are we rapidly approaching a future where filing a claim becomes an obsolete concept altogether?
Wait, like you just wouldn't even have to report it?
Exactly. Will your smart home's internal moisture sensors or your connected car's telematics simply detect the physical damage, communicate silently with your insurer's AI, and drop the restitution funds into your bank account before you even wake up and realize a pipe burst in your basement?
Wow. When the payout arrives before you even know you have a problem, that is a future worth contemplating. Until next time, keep diving deep.